and admits basically that we're going to have a recession, not this no landing, soft landing.
In my view, the least unlikely case is that we do find our way to better balance without a really severe downturn. I think there's a significant probability that there will be a downturn as well, though, but it's not to me the most likely case.
That's the hard landing scenario.
Or just this, I wasn't even thinking of hard landing. I was thinking of even a recession. To me, it's not the most likely case, but it's certainly possible. And of course, many forecasters do predict that.
Welcome to Gold Silver Pros.
These stocks are really, really cheap. I don't know when they're going to bounce. I think that, what I've been saying over and over again is that until the stock market rolls over and admits basically that we're going to have a recession, not this no landing, soft landing idea, you will start to see the S&P roll over. And AI gave it a little bump here. I thought that in March, April that we were going to get this final sell-off in the S&P, which is what we need to finally wash out basically these headwinds against gold and silver and against the miners. As long as people are putting their money in the stock market, they don't really want anything to do with gold. They only really want to go into gold when they have to go into gold. And so right now they don't have that fear level. So I've always said the number one driver in gold is the fear trade. You got to have the big money. Gold is a big market. You have to have the big money move the market. And they're only going to move the market when they have to buy gold. And so we wait. So we've had it'll be a 3-year correction in August for gold. It's been a really long correction. Some people have called it a bear market. I've called it just a correction because we haven't taken out where we broke out from.
Right.
So I just see it as a long, long correction, which has been very, very painful. And so we wait. So you asked me, when is this going to happen? When is it going to break out? I actually think it could break out as early as July, because the market here, everybody is really bullish that the market is just going to keep going higher and higher. But we're seeing this week that the market's, having a little trouble here getting higher than, its last week's highs. And, I am not expecting to see, say, 4,800 this year at all. 4,500 is a possibility, but I think we're in this final rally, this kind of topping. And if it doesn't get back to its all-time high, it's going to roll over. So it's like, show the S&P. When is it going to, going to roll over? So I think it could roll over as early as July, but probably not. I'm looking at September as being really the 2 months when I expect the markets to roll over. It could go further. It could go October, November, but I think the BRICS conference in August, if they announce a new currency, I think they will. They've set up the banking system. They're basically there's been a lot in the news recently how they're replacing SWIFT, and it's a combination of Iran and Hong Kong. Those two places are basically working together to replace SWIFT. But what they haven't replaced is a currency to go with that new system. I think that's coming in August, and I think that is going to really jolt the markets, because this is a paradigm change, and this is the reason why I'm so bullish gold and silver. Is because when you look at all the factors that play in, why people need to go to gold, we're having a paradigm change and I call it end of era change. So the U.S. has basically been the dominant player since 1945, and has pretty much got the rest of the world to do what they want to do. You talk about, the G7, the U.S. pretty much from the G7 alone, they've kind of dictated, economic policy globally. And we've never let China into the G7. Isn't that interesting? It used to be the G8 with Russia. We kicked them out in 2014. So Russia and China are both kicked out of the G7, G8. And they basically have made this economic alliance. and they're mobilizing. And I mean, the BRICS are expanding. I mean, that's pretty evident, right? So this is a paradigm change. And if the US was in a dominant position, we're losing that dominance, which is, that's not a good thing. And it creates risk, and that's what creates uncertainty, and that's what gold likes. So you put that in tandem with all the debt printing, all the money printing, the debt bubbles around the world. It's not just the US that has a debt bubble. Europe has one, Japan has one, China has one. You have debt bubbles all over the place. And so all you need is a little bit of weakness in the bond market, and that creates uncertainty. And I think the key to it all is the U.S. economy, because the U.S. is the #1 economy globally, and New York City is the financial hub of the world still. But I think that is all starting to shift and transition. My expectation is that the growth in this decade is not going to come from the U.S. It hasn't come from Europe, and it hasn't come from Japan. So now the U.S. is going to join Europe and Japan with basically no growth. So where's the growth going to come from? I think it's going to come from Asia. Mm-hmm. And so if it comes from Asia, that's kind of a shifting, right? So that's where the U.S. loses its basically global reserve. It's going to take a while to unfold, but if it starts to trend away from that, and then if New York City starts moving away from New York City towards Asia as the financial hub of the world, this creates uncertainty, which pushes gold higher and higher. I think, and we haven't started talking about why the U.S. economy is in trouble, but there's a long list of reasons why it's in trouble. I think everybody is paying attention, has to be a little nervous. And I think that's uncertainty. I think that's very beneficial for gold. And this is why I've never been so bullish.
Hey everybody, this is your host, 𝘍𝘀𝘾 of GoldSilverPros.com. I'm recording this on Thursday, June 15th, 2023. And today we're going to talk about de-dollarization. This has been a recurring theme on our channel for quite some time. We were one of the first to cover the IMF plans to remove cash from society, and also the BIS's plans and how they're recapitalizing the banking system, including the use of gold. Well, as we march down this path of de-dollarization, the end of the dollar fiat era, and we move into a new multipolar era of competing currencies, we have another news item out that has Iran and 9 other Asian central banks stopping the use of SWIFT and the dollar and using an alternative system. And we're going to talk about that today and how impactful that's going to be on adoption of the dollar. For those people that think that the dollar will last forever or is invulnerable, I think that's been disproven many, many times. And while it may take time for the world to release its hold on the dollar, for the dollar to release the world's hold on its exclusive hold on use in international trade as a currency, as we continue down that path, we're going to see more and more of this news. And this comes from mainstream media as well as local sources as well. We're going to start off by an article in Forbes. This came out in May. Iran urges Asian partners to drop the dollar from bilateral trade. It says here, members of the Asian Clearing Union, this is the ACU, which has the 9 different Asian members that are going to participate now in Iran system, dropping the SWIFT, which include India, Pakistan, and Iran. They're launching a new cross-border financial messaging system in the coming weeks as an alternative to the main existing international network SWIFT. According to officials from Iran, which currently chairs the body, the members of the bloc agreed at a meeting in the Iranian capital of Tehran on May 24th that they would set up a new system within a month. Now, technology takes time to implement, so obviously the technology was already there. It had either been developed for someone else or something that they had been working on. The announcement comes, obviously, as they're ready to start adopting that technology. A quote from the article, the ACU countries decided to have a customized system for themselves, considering that SWIFT is not available to all countries and given that it has its own costs, says Central Bank of Iran Deputy Governor Mohsen Karimi, and comments reported by the Iranian state-owned Fars news agency. Well, why are these countries doing this? Why are these 9 Asian Clearing Union countries adopting Iran system over SWIFT, which has been the standard basically as long as we've been doing wire transfers in the modern age? And that's basically because the U.S. sanctions on Iran and other countries are preventing some of these countries from using SWIFT, and so they had to develop their own system. Of course, Iran and Russia are developing their own systems as well, as we've talked about. And And what we have now is a collection of regional systems popping up to replace SWIFT as a de facto international system, much like these other currencies will replace the dollar as a de facto international currency. It's the same thing. They're just setting up the processing networks. But in these processing networks, they're not using dollars. They're using alternative or other currencies or local currencies. Long-term bull because they're not gold silver people. And then the other reportables, can't imagine why they dropped 7,800 contracts. I think gold long-term is going to go higher. But obviously in the short term, they weren't as concerned. Why does that matter? Well, at the same time, the bullion banks and the producer merchants who are closest to the physical are going along. We had just not record, but for this contract and what I would have expected, we've had really high delivery. We're looking here at the delivery notice report, the NYMEX delivery notice report, again, put out by the CME Group who runs these markets. This is the COMEX exchange. This is the gold 100 futures. And on 5/30, it was the first or second trading day of the month. Let's actually go up the third trading day of the month. Nope, second trading day of the month for gold, 9,024 contracts of 100 ounce gold. And then the next day, 65.37. So the first two big delivery days of the month for June, contracts were redeemed to the tune of over 15,561. If you multiply that by 100 ounces of gold per contract times almost $2,000, about $1,960, $1,970 in terms of gold price, you get over $3 billion. So $3 billion of gold is changing hands on the COMEX in a day, and that's tremendous. Why? Because if you look at the tail of the tape, it's on the June contract, the first couple of days of delivery. We actually lost more contracts than we had. We still had some contracts left, but over half of the contracts are gone, which means people are coming for like almost immediate delivery. 9,024 deliveries in a day. And then again, you see on the stops report, and this isn't available at CME Group until the end of the day because that report looks backwards. You'll see another 6,500, when today's trading data is finalized. And people are rotating out of June and going into August, which is the next big delivery month, or the next big contract and delivery month. But that didn't stop them from going to June. And how did we know that probably was going to happen? Well, it's this number right here, this exchange for physical that you guys see on the screen. When you do exchange for physical, you're saying, I don't have enough physical available in the COMEX in the current month. Maybe it's not a big trading month. There are not a lot of contracts. Certainly look at July. There's only 2,906 contracts. You're not going to get a lot of delivery when there's not a lot of open interest. And the speculators will play about 6 of these months in a big way, and the other 6 will be much less. So, in June, we certainly had the contracts to deliver, but before that we didn't. So we're doing a loss change for physical, which is going over the London market and hunting for the physical there. So that had been happening for the last couple of months. People had been trying to trade their position in the U.S. into London, maybe to get more liquid access to gold.
Right. For me, it really only comes down to one thing, and that's basically the U.S. economy slowing.
Yeah.
So we're starting to see signs of it.
Mm-hmm.
There's a lot of retail, pressure. Just about all of your retail companies, your Walmarts and your Kohl's and your Targets, all of these retail outlets are all starting to, Home Depots, they're all basically starting to say, we're under pressure here. We're not, this isn't a good year for us. Right. And then you have, in tandem with that, you have high interest rates. So high interest rates, that makes it harder for consumers to spend money because if you spend money and you have easy credit, it's easier to buy stuff. And when you got interest rates at 5%, you don't have easy credit. So if you want to buy a house, at 7-8%, you want to buy a car 7-8% right now. That's high. I mean, you buy a car at $40,000 at an 8% interest rate. That's a lot of money annually, just in interest alone.
I don't know any normal family that can afford that. And when I was looking at potentially switching off of my truck to a more fuel efficient car, maybe 6 months ago, I said the cost of cars is way more than I'm ever going to pay for gas. It would be like a 10 to 15 year break even period. So I'm like, why would I switch? And new vehicles are real expensive. So are new houses. And we've started to see that affect housing data, the housing market starting to roll over. So I agree with you. And I think we're headed to an era in which the consumer doesn't have any money to spend. And that's going to make it really hard for that economy to grow. Where I don't know where we're going to get that positive GDP going forward.
Yeah, I'm in that camp as well. It's like the economy right now is slowing, and there really are no drivers to push it higher. So in other words, to come out of this, we're slowing. And how do we start growing, right? The Fed, now we can start talking about some of the issues, these headwinds, and the reason why I think the economy is going to slow. And once it slows, I think that's when gold basically gets its demand back, if you will. The fear trade comes in. So we talked a little about how interest rates are making it harder for consumers to buy stuff. And then if you look at the banks, the bank crisis that started in March, that crisis did not go away. Those balance sheets did not get cleaned up in 3 months. Those balance sheets are still a mess. So we have a credit contraction. So if that's in place, that means, how does the economy start growing? I hear a lot of people on Wall Street, these analysts, and basically they just talk their book, and I say they cherry pick the data. And I'm like, you're bullish the market, and you say we've entered a bull market as we're up 20%. But where are these drivers to get us from going from a slowing economy to a growing economy? Where are these drivers? I don't see any drivers. As a matter of fact, I think it's for me, it's like zero. So you got the consumer. Okay, you got employment, right, which isn't going down. I mean, it's not going up. So we're not getting worse inflation. So the consumer's hanging in there, but they're hanging in by their fingernails. It's not as if the companies are hiring more people. We're just hanging on, right? And so the consumer is actually having trouble. So the jobs are hanging on. We're not going to add a whole bunch more jobs. We're just kind of hanging on. But jobs is a lagging indicator. You shouldn't be pointing at jobs and saying that we have a bull market, because the jobs, that's the last thing to go. That's the one thing you don't want to use as your storyline of growth. And then if you look at the consumer, how often in the last, say, few months have you read something about the consumers having trouble, right? And they're having trouble because inflation has decreased their earnings power. It's decreased their wealth effect. So Americans have gotten poorer. Americans have less money to pay their bills. They have less discretionary money. And that's not coming back, because people are talking about deflation. But true deflation is when costs start dropping. So your grocery bill basically goes back to normal, or your utility bill goes back to normal. Or when I say normal, say back to 2019 levels. These prices aren't going back down.
So what the heck is going on with the Shanghai Clearinghouse? Here, an article at Crypto News, Shanghai Clearinghouse adds support for digital yuan in commodity trading. Why is this important? Well, we're going to get to it in the presentation. Shanghai Clearinghouse, a financial institution under China's central bank, has introduced digital yuan clearing and settlement services for commodity trading, enhancing cross-border transactions and promoting the internationalization of China's currency. That single paragraph right there tells you how close the Chinese are to being big competitors to the US dollar international trade. They're using technology to propagate trade using the yuan and what? Commodities. And what have I been saying now for 3 straight years? Commodity wars are coming. Resources and access to resources are going to drive further geopolitical changes and currency changes. It all basically is boiled down to the allocation of goods in society. Trading networks form, currencies form on top, geopolitical unions form on top of that, and then military forms on top of that. And that all we're seeing is a realignment of all of that stuff. It says here, the Shanghai Clearinghouse has taken a remarkable step towards integrating China's central bank digital currency, or the CBDC, commonly known as a digital yuan, into the world of commodity trading. The move highlights the growing institutional acceptance of the digital yuan and its potential to revolutionize financial transactions in the country. With the new launch services, traders can conduct cross-bank clearings and settlements using the digital yuan for commodities. Guess what they're not going to be using when they're using the digital yuan? They're not going to be using the US dollar or any form of it, whether it be paper or we eventually get the digital dollar. China ain't going to use it. The team says this development offers several benefits, including security, cost effectiveness, and simplified cross-border transactions. Experts believe this initiative could further propel the internationalization of China's digital currency. Okay, so they're not holding back. Everybody thought I was nuts in 2019, April 2019, when I started talking about this 4 years ago. It's right here in front of you right now. And I talk to people on an everyday basis about this stuff, and their eyes glaze over. They just don't get it. And they're not paying attention to this stuff, but it's vitally important. This is not the first instance of digital yuan adoption commodity trading. In October 2022, the Shandong International Commodity Exchange reportedly executed a 1 million yuan settlement for imported rubber using the digital yuan, making an early milestone for the CBDC. The adoption of the digital yuan is not limited to commodity trading. Recently, Qingdao City introduced digital yuan payments for urban rail transit fees, enabling users to pay using digital currency conveniently. Moreover, during the 618 festival, a leading online shopping platform, JD.com, witnessed a staggering 254% increase in digital yuan transactions compared to the previous year, with transaction volume setting new records. The surge in digital yuan usage demonstrates its growing popularity among consumers in China. See, I reported months ago where China was trying to implement the digital yuan, and it didn't work because everybody had Alipay and WePay, and they didn't see the need to use it. But China pushed it out and gave discounts and rewards. Kind of like when you sign up for a credit card and they give you credit card points, and you pick which credit card you want based on the lowest interest rate and the more points you're going to get and your balance. Well, China figured out if we give points or rebates or incentives, people are going to adopt this. And guess what? They're adopting it. To end the article, these developments come after the Chinese government decided to pay civil servants using the digital yuan starting in May 2023. So government employees are getting pay in digital yuan, not regular yuan. This move aims to promote wider adoption of the official digital currency, particularly among government personnel, teachers, healthcare professionals, journalists, media technicians, blah, blah, blah. The introduction of the digital yuan for salary payments further solidifies its status as an official means of exchange.
Gold has to break out. And then once gold gets above 2,100, little sis is going to come running. And she's just going to run right past her brother as far as growth, speed. She'll outperform him by 2x or 3x.
Yeah.
And so when silver runs from, I think the breakout level is going to be 27 or 28 on silver. It's like once we get above those levels, we'll never go back down. And then once we break through 30, then the technicals will kick into gear, and you'll have basically a magnet to 35. Mm-hmm. And then once you get to 35, it's going to be really hard to stop it from going to 50 because there's just not a lot of resistance above 35.
Yeah.
35 is like the last little breather. It might stay there a month. And then once it goes 36, 37, it's basically going to be, see you later, I'm out of here. So that's going to flip the trend for the silver miners, because the silver miners are going to be going up 100, 200%. They're going to be going absolutely bonkers. So that should turn the sentiment in the silver miners. Now, and I would think that'll also turn the trend in the gold miners as well. So we need to get above 2,100 in gold. That's the trigger for the whole deal. You get above 2,100, you stay above 2,100. 2075 is a really important level. So once basically you can relax until gold gets above 2050 and silver gets above 2650. Until then, you just relax. It's all noise. Once we get above those levels, then we can pay attention. Say, okay, we're getting really close here, people. Do we basically go up against this resistance and come back down, or do we bust through? And that's when we start to pay attention. Until then, it's basically all noise. But one thing we can do is we can buy the dip here. So I do Friday night recaps on Twitter, and one of the things I do is I try to identify, the opportunity of the bottom. When's the bottom coming? When is the bottom? What is the bottom? And so for me, I say, okay, wait for the S&P to get to 3,700, and then we'll see how gold reacts. When gold's at when S&P's at 3,700, we're going to have a pretty good idea of what gold wants to do. Does gold want to break down and just blow up, or does it want to get a bid and go higher?
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.